This video gives an overview of business forecasting and planning using foreCASH software. There are two key strands to business forecasting. Annual or multi-year forecasting, typically used for producing an internal annual plan or to support a funding application for a bank or other loan. Here you need to generate monthly reports showing profit and loss, balance sheet, funds flow and cash flow. The second strand is 13-week or other short-term cash flow forecasting. This is used to preempt cash spikes in the next few months and to ensure that you can pay the rent, salaries and other key costs as they fall due. The focus now is on cash flow reports, and in addition to monthly you need a weekly and possibly a daily view. You'll also need cash management tools. foreCASH software can be used for annual forecasting, short-term cash forecasting, or indeed both. Let's look now in more detail at annual forecasting. With annual forecasts, the primary report for most people is the profit and loss forecast. When building your profit and loss, foreCASH allows you to use department or cost centres as divisions or identifiers. Sales can have up to 3 levels of division. For example, you could split by area, a high-level product group, and a further subgroup where individual sales items would sit. Overheads have a single division, but can also be split by type. You can specify the type, descriptions, and their order so that you can replicate your existing management account format. If you already have some workings in Excel, such as sales by team, you can add data feeds so that foreCASH pulls your figures into a forecast. Please see our separate videos on Excel data feeds for more information. Once you've finished your budget, you can set it as a base point. If you then enter actual figures or revise the outlook for later months, foreCASH can generate variance reports. These can show the variance by month, year to date, and the full year outlook. Your variance report could also be set against prior year figures or revised budget, which, for example, considers the opening of a new site, overseas expansion, or taking on a new customer. foreCASH also generates monthly balance sheet reports, for example, highlighting and showing new capital expenditure. It also gives a monthly funds flow, which helps you reconcile your cash flow to your profits. For example, rising stock levels may reduce the cash generated from your profits. And the cash flow report highlights receipts and payments split by key types such as salaries, rent and taxes. All of these reports, plus an optional VAT reconciliation and bank summary report, can be exported into fully formatted Excel files so that it's easy for you to share and distribute the forecast. foreCASH includes a number of features to enable accurate modelling of specific industries. Project-based companies can model projects with multiple stages, deposits and retentions, construction industry scheme PAYE payments, complex invoice schedules, and, if timescales slip, changing the start date or duration of any stage will automatically cascade throughout the length of the project as a whole. Please see our separate video for more information. Please note, not all versions of foreCASH have this feature enabled, so please check before purchasing. In the wholesaler and import sector, invoice and stock-based finance is common and is modelled by foreCASH, as are supplier and customer rebate schemes, cash discounts, import VAT and import duty. Manufacturers can model 3 levels of stock: raw materials, work in progress and finished goods. Stock levels can be based on a combination of maximum, minimum levels of stock and stock days, or can be set manually. If your factory has scheduled maintenance or set staff holiday periods and is closed for an extended period, this can also be reflected in sales and purchases. For service-based companies, the option to enter annual or quarterly invoiced income, and to enter salary costs at employer level can be useful. These industry-focused elements ensure that your income and sales collections are reflected appropriately, that stock levels and work in progress in your balance sheet is reasonable, that often lumpy PAYE, VAT and duty payments are recognised, giving you a sensible balance sheet and cash flow forecast. Turning now to those focused on 13-week or short-term cash forecasting. foreCASH has the option to produce forecasts from 4 months in length. It can be rapidly rolled forward, allowing you to update it at the start of each month. And as you go through the month, it can be reconciled with actual cash flows. Initially, cash flows during the 4 months will be driven by past activity. You can import your opening debtors and creditors ledgers via a CSV or Excel file from your accounts package into foreCASH. foreCASH offers a wide range of payment terms, or you can import specific dates from your accounts system. Later on, new activity from sales, purchases and overheads will hit the cash flow. You can update your latest monthly sales estimates either manually or from an Excel file. foreCASH can apply a monthly and weekly profile to activity to reflect the patterns you experience. Alternatively, if you have a sales order backlog, you can import a schedule of daily sales. Similarly, if you have known purchase order commitments in the future, these can be imported from a CSV or Excel schedule. Finally, payroll and recurring overheads are layered into the forecast. The detailed opening data, modelling of industry-specific features, and range of forecast options allows the generation of a precise cash flow forecast, which can be viewed by month, by week, and by day. If cash drain is identified, you can drag and drop or reschedule payments. Other cash management features include approved payments reports, graphical reports showing cash balances pre and post any manual adjustments, help communicate the situation, and a list of amended transactions allow you to track how you're managing strain or to help refine the settings for future months' forecasts. foreCASH has the versatility to produce both annual forecasts and short-term rolling forecasts. You may start with a simple annual forecast, but then need to enter actual results or revised outlook for later months in order to generate variance reports. foreCASH can do this. If your priority is short-term cash flow, foreCASH allows you to enter precise opening balance sheet information at the start of each month. You don't have to enter past actual information, and assuming your overheads and payroll costs remain largely static, you only need to enter 4 months of sales data to quickly update your forecast, giving a rapid update to your cash flow at the start of each month. However, if the situation changes, you can extend the length of your forecast and rapidly create an annual or multi-year forecast. Similarly, if you've previously been relying on foreCASH for annual budgets and some cash strain becomes apparent, you can enter the latest month's detailed opening balances into foreCASH to make use of the cash detail within the weekly and daily drill down, and also of the cash rescheduling features. Please note that not all versions of foreCASH have cash rescheduling features enabled, so please check before purchasing. foreCASH has the versatility to produce single year or multi-year forecasts and also short-term cash flow forecasts, addressing the 2 core forecasting requirements of businesses. For more information on foreCASH, including trials and training, please use the contact options shown on screen now. Thank you for watching.